When you are sending an offer, how much down payment is an optimized down payment? I got these questions a lot from buyers. So today I want to give you an analysis of what are the things to consider when you decide how much down payment to put. The first thing to consider is what is your comfortable monthly payment? So when the lender look at it, they are going to calculate debt to income ratio. These are all pre-tax calculation. It uses your gross income. However, for you, when you want to calculate is how much amount of mortgage housing payment you are going to manage every month. It's not just a mortgage payment. It also includes property tax, which is usually about 1.25% of your purchase price, and insurance. Average is about $80 every month. And if you're buying a townhouse or condo, don't forget to add the HOA fee. So adding all these numbers together, you have a monthly housing payment, and divide that number by your monthly gross income is how the lender calculates your debt to income ratio. Now, if this ratio is too high, usually the lender prefer to be less than 43%. If it's too high, then you wouldn't be able to get that much loan. So this is the first thing to consider, your monthly housing expense. And for you, the second thing to consider is your cash flow. Now, lender tells you these are the monthly payment you can manage based upon lender perspective. But for you, after putting aside your 401k, paying some other expenses, how much cash you left, and using that housing payment to compare with your remaining cash to see if that is a comfortable level or not. After these two factors are considered, the next thing to consider is if you really have lots of funds that you can put in the house, think about, is it making sense to put all of them as a down payment, or is it making sense to keep some aside as a rainy fund, emergency fund, or you have other place that you can invest to get a better return? Because right now the interest rate is so low, it's only about 3%, sometimes even less than 3%. So for every 100,000 additional payment of mortgage amount you put in, it's roughly about $420 monthly mortgage payment. So think about if you have a better usage of your funds somewhere else. And if you do, then I don't recommend you to put all of the funds into your down payment. Of course, the next thing to consider is, do you need to participate in competition when you put an offer? If there is a competition, the higher down payment, the more comfortable the seller will feel. So that's from the perspective of the offer competition to enhance your opportunity to get your offer accepted. So these are a few main things to consider when you decide on how much down payment you want to put in. And ultimately, not necessarily is always the more down payment the better. It's an optimized amount that make you feel comfortable monthly to manage it. And second, utilize the current low rate to generate the higher return for the cash you have in your hand. And third is how it's going to enhance your offer to increase its opportunity being accepted. So that's the three major considerations when you are deciding on the optimized down payment. That's all for today. I will discuss with you more about other aspects of the real estate next time.